Welcome to the weekly report from Fibo Group. My name is Yuri Tsihush. This week's trading will be interesting with the publication on interest rates from the Fed on Wednesday. This is the leading indicator of output from the world's largest economy. As well as this important number, a number of other important releases are due to hit the market. Monday we'll see the release of industrial production from the United States. On Tuesday, the release of economic data from the agency ZOO and employment data out of Great Britain. The highlight of the day will be the interest rate announcement from the Federal Reserve. Thursday will show retail sales from the United Kingdom and data on real estate market from the United States. At the end of the trading week, the focus will be on output of consumer price index in Canada. To kick off the week, we can expect a quiet start during the European session, as insignificant statistics hit the market. During the American session, we expect a pickup in trading as the industrial production figures are released. This important figure may give the Fed a reason to lift interest rates, and it is important to know that for 3 months, industrial production has remained about zero. Tuesday's Asian session will begin with a meeting on monetary policy of Australia, which will create high volatility in the Australian dollar. This volatility may carry over to the European session as traders await the output of the index of economic sentiment in Germany. This index is a leading indicator of the investment climate in Germany and is calculated by a panel of 350 experts. So far this year, this index has been declining at a rapid pace. In addition, we will also see the release of data on the UK labour market, and during the American trading session will be the publication of the interest rate from Fed. A strong dollar improves the overall economic situation in the US, so numbers tend to be a hot topic amongst traders. We expect high volatility in the US dollar against other currencies. Continuing Thursday, traders will pay attention to the retail sales from UK. Throughout the year, this consumption indicator has shown great diversity and may create some volatility with respect to the British pound. And as usual with us from Australia is Andrew Masters, an investment analyst from Fibo Group. Andrew, welcome. What is your take on UK retail sales?
Thanks guys, it's always a pleasure to be here. We saw some positive news last month as UK retail sales were up 2.7%, boosted by sales of clothing, footwear and back-to-school gear representing the biggest lift since January 2014. The British Retail Consortium's monthly survey showed growth was up across the board except for a few categories and rose at its fastest pace since December 2011. The worst performing category was food, falling by 1.6% and setting a record low 3-month average decline. The grocery sector remains the weakest part of UK retail as profit margins fall, with limited growth tied to low levels of inflation and compounded by increasing price competition. There are also a few new competitors on the scene, breaking the domination of the Big Four supermarkets. The biggest winner from the survey was online sales of non-food products, which grew at 19.8% last month compared to the same time last year, which shows Brits are increasingly turning to online purchases for their goods. This was the fastest growth recorded since the online monitor started in December 2012. All eyes will be on this week's release of UK retail sales data to see if the momentum can continue in the second quarter and may give a boost to the British pound against a basket of currencies. The sterling has been on a downward slope lately as the market comes to terms with a possible yes vote in the Scottish referendum for independence, which was just unthinkable a month ago. Any positive news for the pound will be a welcome relief for traders who are long on the currency. Overall, it's been a very successful summer for non-food retailers, placing them in the driver's seat for the autumn to winter trading period and the run-up to Christmas, which is usually a busy period, and we may see some positive numbers.
Thank you, Andrew. If to talk about American session, we will see focus on data on real estate from the United States. In particular, the index of the construction of new homes and building permits. These numbers are leading indicators on the economic conditions from the United States. At the end of the week, we'll see traders focus on the Canadian dollar, while awaiting the CPI from Canada. Monthly value has risen from 0%, which raises concern for traders. Since last summer, this figure has been on an uptrend. Analyzing the trading week, we will see the release of important data, including the release on interest rates from the Fed. Also, we expect the week to be full of action, although on Monday and Tuesday, we may see traders take a break. So, thank you everyone. Have a wonderful and profitable week.